A client is looking for long-term care insurance. She wants a solution which is cost-effective and also wants underwriting which is simplified, which means there's a greater chance of getting the coverage. The product that we will be looking at is called Sun Retirement Health Assist from Sun Life. She is a 58-year-old non-smoker. She wants a benefit of $5,000 a month. This plan only provides a weekly benefit. $5,000 a month times 12 months is $60,000 in a year. If we divide that into times 12 months is $60,000 in a year. If we divide that into weeks, we get a benefit of $1,155. Let's add this information. We have a female, age 58. This plan does not have any difference in rates for smokers and non-smokers. Let's plug in the benefit amount. There are not a lot of choices with this plan either. The waiting period can be 1 year or 2 years. Let's start with 1 year and see what the monthly premium is. It's $354. If we extend the waiting period to 2 years, then the premium drops to $273. There is one benefit which is available, a return of premium on death. If we add that, then the premium becomes $427. This is with a waiting period of 2 years. If we go to 1 year, the premium jumps to $549. Females pay more for long-term care insurance than males. Let's just see what the difference would be for a male. $395 instead of $549. We can't do much to change our gender though. Let's look at this plan in more detail. First, when are benefits payable? There are 3 forms of dependency. The first is to require constant supervision because of a deteriorated mental ability. Another way is to be unable to perform daily living. The third way is to require standby assistance. Let's look at the output. We've got our female 58. This is the plan. The premiums are payable for life. There's a waiting period of 2 years. The benefits are payable forever. And this is the benefit amount. There is a return of premium on death. What that says is that if the person dies before the benefits start getting paid, all the premiums are refunded. If the person dies on or after the start of the benefits, then the return of premium is all the premiums paid less the benefits made. Here are the premiums. There's a monthly policy fee. There's a premium for the base amount of coverage, and there is a premium for the optional return of premium on death. If this benefit does not look attractive, it can be removed. The total premium ends up being $427 a month, or about $5,120 a year. The premiums will not change, or about $5,120 a year. The premiums will not change during the first 5 policy years. After that, the premiums can change, but they will remain at that new level for 5 years. Let's take a look at how the premiums could change. We have 2 scenarios. The first one is a baseline, and the second assumes that bad things happen. Investment returns drop by 0.5%, claims go up by 10%, and expenses increase by 10%. We see that there is no benefit available until age 66. This plan pays no benefits in the first 5 years or the later of the policy anniversary after the 65th birthday. Also note that the benefits do not increase with time. If the adverse scenario materialized, then premiums could increase after the 5 years and would go from $5,120 to a little over $6,000. If you answer yes to one or more questions, you become ineligible for coverage and should not apply. For instance, if you're using a wheelchair, if you're receiving disability income, if you already need assistance with their other criteria here too, multiple sclerosis, etc. This last question is related to smoking. There is also a test of memory. You can pause this video to look at this exercise in more detail. That's our look at Sun Retirement Health Assist. There is another product available, Sun Long-Term Care Insurance. There are also products available from other insurance companies. We're using Sun Life as our example here. Monthly benefit, $11.55. Here the waiting period is much shorter, 90 days or 180 days. The benefit period can be as little as 100 weeks or unlimited. Let's use unlimited for now. The premium is $469 with a 90-day waiting period. If we extend that to 180 days, the premium drops to $440. Is that a big enough difference? There are benefits available too. There can be inflation protection while on claim. There can be inflation protection prior to a claim, increases in benefits of 2% a year, increasing to 3% while on claim, and also a return of premium. So let's add this inflation protection and see what that does to the price. $440 goes to $678. If we go back to coverage and we make that 90 days, then the price is $718. 100 weeks drops the price to $328. 250 weeks makes the price $529. This shows there is a lot of variability. The products can be configured just the way you want. For our purposes, we'll assume the benefits and the waiting period is 90 days. Let's look at the report. Here are the details. Female 58, premiums payable for life, comprehensive benefits after 90 days, forever. This is the weekly benefit. Inflation protection, 2% when not paying benefits and 3% when paying benefits, compounded. Here you get an idea of the relative cost. Here the policy fee is a lot more expensive, $13.50 a month. This is the premium for the base coverage. Protection against inflation is about $250 a month. Here's the sensitivity analysis. Notice now that benefits can start right away. The benefits go up with indexing. After 5 years, the premiums could increase. The situation here is the same as before. Lower investment returns, more claims, higher expenses. That's our look at long-term care insurance.